And that gets you
Good
to a
point.
number, $10 million of Bitcoin when we're 20% of the world's wealth in today's dollars.
In the vast landscape of cryptocurrency, one name stands out prominently: Michael Saylor, a renowned billionaire investor and the founder of the business software and business intelligence giant MicroStrategy. Known affectionately as the biggest bull in the Bitcoin arena, Saylor's journey with the leading cryptocurrency is nothing short of a fascinating evolution. Once a vocal critic of Bitcoin, Saylor had reservations about its longevity, likening it to mere online gambling. However, fate had different plans for him, and he underwent a profound transformation. Today, he is not just an admirer, but a significant figure in the cryptocurrency realm, particularly in the context of Bitcoin, the flagship asset in this burgeoning market. Saylor's personal Bitcoin portfolio boasts an impressive 17,000 BTCs, currently valued at over $6 billion. More strikingly, he has steered his company, MicroStrategy, into becoming a proxy for indirect exposure to Bitcoin. With over 158,400 BTC, valued at approximately $5.8 billion, held in the company's coffers. This strategic move underscores Saylor's unwavering conviction in the fundamentals of Bitcoin and his confidence in its future price appreciation. In our latest video, we delve into Michael Saylor's recent interview with the renowned YouTube personality Crypto. Saylor lays bare his belief in Bitcoin's future and offers predictions for the upcoming months and years. In essence, he anticipates Bitcoin reaching the $1 million mark per coin in the future, with even grander aspirations of hitting the $10 million milestone and beyond. The interview explores Saylor's personal Bitcoin journey, MicroStrategy's adoption of the Bitcoin standard, and his perspectives not only on Bitcoin's price trajectory but also on the current macroeconomic landscape and where he envisions it heading. Don't forget to subscribe and hit the like button for this video. Without further ado, let's dive into the insights that Saylor has to share.
Well, I think in the fall of 2020, I disclosed that I'd acquired 17,732 Bitcoin, and I haven't sold any. You don't sell your Bitcoin. And then MicroStrategy, in its latest quarterly release, announced that it had now reached 158,400 Bitcoin. So we have just been consistently acquiring more Bitcoin, and we've, done it through a dozen or more different transactions, cash buys, debt issuances, equity issuances, etc. So generally, you could say that I'm long Bitcoin. I think MicroStrategy is getting close to having invested $4.7 billion of cash, of real money in Bitcoin, just slightly less, something like that. And I bought the 17,732 Bitcoin, back when it was about below 10,000. So I probably invested $175 million of cash at that time in Bitcoin. Obviously, we're long-term, so it doesn't really matter what you spent to buy it. It matters more about how many Bitcoin you have and whether you're still holding the Bitcoin when Bitcoin hits $1 million a coin or 10 million a coin. I don't think it's very wise to sell Bitcoin. I'm a Bitcoin maximalist, and so Bitcoin maximalist means a lot of things to a lot of different people, but certainly what it means from an investor point of view is I view Bitcoin as the apex asset. So MicroStrategy is a public company. Our strategy is literally to acquire more Bitcoin. Our strategy is not to trade. Our strategy is not diversified investments in a portfolio of technology companies. Our strategy is very simple. We're a levered long Bitcoin operating company. So if you think about us, comparing us to like a spot Bitcoin ETF, a spot Bitcoin ETF would only own Bitcoin, but it would be unlevered and it would charge you a fee. And our strategy is We use intelligent leverage. For example, we borrowed $2.2 billion at 1.6% interest blended. So we have very intelligent leverage, long-term, not mark to market. And then we buy Bitcoin with it. And then we don't charge a fee. And we generate a premium because when we generate cash flows or we do accretive financings, we then convert that into Bitcoin for the benefit of our shareholders. Since MicroStrategy bought Bitcoin, we entered the market August 10th, 2020. And so what's happened to all these asset classes when you think about diversification? Well, between August 10th and October 31st, when we published our results on our quarterly result of MicroStrategy, then Bitcoin was up 192%. And that works out to a compounded annual growth rate of more than 40%. And the S&P is up 25%. And the NASDAQ's up 17%. Gold lost 1%. Silver lost 18%. Bonds lost 24%. So in terms of asset classes, Bitcoin is outrunning all of the other conventional asset classes. But what I would say this is you could buy the best companies in the world and the best real estate in the world, it's still going to underperform Bitcoin. Bitcoin goes up 40%, then 35, then 30, then 25, then 20. And like 10 to 20 years out, it's clipping along at 20%. And then over the course of 100 years, it's growing 14% a year. And against that, the S&P index will probably grow 7% a year. The money supply will grow 7% a year. So if you diversify in the S&P index, you're just going to maintain your wealth, track the money supply if you get lucky.
Michael Saylor gets why Bitcoin is a big deal. And he's not just bullish for now. He's thinking decades ahead. But here's the kicker. He reckons Bitcoin's next price surge might not just be about its strengths. It could also ride on the dollar's messy track record. Saylor spills the beans on how the dollar's long-term blunders might be the turbo boost Bitcoin needs. Forget fancy words. We're diving into Saylor's take on where the greenback is headed and how it could shake up the crypto scene.
If you do the calculation, the US dollar is being inflated and supplies 7% a year for 100 years. Weak that's the strong currency. That's the world reserve currency is increasing and supply 7%. So the asset inflation rate in dollars is 7% a year over 100 years. That's how you get from $10,000 an acre to $10 million an acre. Now, weak currencies in the developing world are inflating at 14% a year, unless they're really mismanaged and they're inflating at 21% a year. But I'll give you a simple fact. If you start with $1 million and you hold it in dollars in currency that's being inflated and supply at 7% a year, after 100 years, your $1 million is worth about $700. But what do you think it's worth if you're holding it in 14% debasing currencies? 28 cents. Okay, so clearly the weak currencies don't last 100 years because people are smart enough to realize that $1 million going to 28 cents is not a good investment. Bitcoin is going to replace all the assets that are currency derivatives, and it's going to replace all of the assets that are weaker properties. So for example, I'm still going to use the dollar to pay my employees, but maybe I won't hold sovereign debt or corporate debt on my balance sheet. Maybe I'll replace the debt with Bitcoin, right? Do I want to wait 30 years and get paid 3 or 4% interest for 30 years? Or do I want to own Bitcoin, which is appreciating at 40% a year and in the extreme will appreciate, say, 14% a year, right? Tax-free or tax-deferred. So if you think about it, Bitcoin's replacing bonds. It's not replacing the CNY, the euro, or the USD. It's replacing the bonds that are paying coupons in euros or CNY or USD. And then it's replacing value stocks because you bought that value stock, like that utility company, because it pays a dividend. And it pays the dividend in USD or euros or CNY. So if the value of the currency is falling 7% a year, then the value of the discounted cash flows is also falling, right? The discount rate is the 7%. So you got to take the cash flow from the value stock and take the risk-free rate of 7%, tack on a risk premium of 5%, and you have to discount the cash flows of the value stock by 12% a year. So you see, if you think about the math, you realize that the value of the cash flows from the company are falling exponentially, and the higher the inflation rate, the less valuable the cash flows in the future. So ultimately, what you have is an example where the monetary inflation rate is benefiting people that own a scarce asset like Bitcoin, and it's undermining the other assets. And so instead of focusing upon currency, because, you know, there's $900 trillion of like wealth in the world, you only need 30 trillion to 60 trillion of working capital to basically trade high frequency, to buy things, and et cetera. The other $850 trillion is invested in real estate, bonds, stocks, collectibles. So you see, if Bitcoin is the strongest asset, then what's going to happen is people are going to say, I'm not going to invest in real estate and value it at 25 or 30 times rent. I'm going to value it at 10 times rent. And so maybe I've overvalued the real estate by a factor of 2. And so I sell the real estate and I buy Bitcoin. And I'm not going to value the S&P index at 25 times earnings. I'm going to value it at 12 times earnings. And I'm going to sell the S&P index and buy Bitcoin. You see, as we demonetize, I'm not going to value the bonds. Why would I hold a bond that yields 3 or 4%? If I get paid 5% interest after tax, it's 3%. So you're getting 3% after tax, return on a bond. And if Bitcoin returns 14 or 15%, then why wouldn't I sell some of my bonds and buy some more Bitcoin? So what you have is capital. It's flowing from the weaker assets to the stronger assets. All of the Bitcoin haters, they always jump on top of this. It's not a good currency because, it's volatile, and because people won't sell you things in it and you can't buy things with it. And they have basically brainwashed and straitjacketed themselves mentally by picking the wrong model. And the right way for them to think is, if I gave you $100 billion of real estate in Africa, and if every country was unstable in its government, and if the people that ran the country didn't like you, would you keep the real estate in Africa, or would you trade it for Bitcoin? And once you get that idea through your head, if you lose confidence in the policies of a government, or if I gave you $1 billion of stock in a company, but the CEO was crazy, would you keep the stock, or would you trade it for Bitcoin? When you lose confidence in an executive, when you lose confidence in a company, when you lose confidence in a country, when you lose confidence in a currency, most of your wealth is tied up in the real estate and in the assets in the country and in the stocks that are exposed to the country. So as the world sees chaos, as they get nervous, you trade the assets that are exposed to the chaos risk, to the counterparty risk, and you buy the asset, which is not a currency derivative. It's not a country derivative. Bitcoin doesn't care about the company's management team. It doesn't care about the employees. It doesn't care about the country it's in. It doesn't care about the currency it's in. You see, you're moving out of that dimension. And so what you've really got is something like 99.5% or 99.9% of the wealth of the world exposed to country and currency and company risk. And Bitcoin is the alternative. So we don't have to replace the CNY or the yen or the euro or the dollar for Bitcoin to go from where it is to 10 million a coin. All we have to do is educate the people that own everything in the world that Bitcoin is digital property. And once they understand that Bitcoin is digital property, they realize they're overexposed to physical property. They're overexposed to physical companies. They're overexposed to physical stocks. They're overexposed to physical collectibles. They're overexposed to gold. And people aren't stupid, right? They're rational. Once they understand this thing is better, they just start selling the thing that is imperfect and buying the better thing. And the capital flows from the traditional 20th century economy into the digital economy of the 21st century. Bitcoin's price adjusts up because the supply is fixed. As the price goes up, awareness increases. As awareness increases, investment in the ecosystem increases. As that increases, regulatory clarity increases. People build more products like the spot ETFs. They build new exchanges. They build new custodians. Conventional banks offer custody services. Conventional banks offer credit services. Insurance companies get involved. Politicians get involved. Eventually, big tech gets involved. Pretty soon, it gets built into the iPhone. It gets built into Google. It gets built into Microsoft. As it gets built into these things, retail and institutional awareness builds. As it builds, people realize they're underexposed. New use cases get commercialized. People embrace the new use cases. Demand increases. The price moves up. Rinse and repeat. The entire thing is a virtual cycle, and it's a reflexive cycle or a positive feedback loop. And because Bitcoin is just pure money, right? It's just as effective at 100,000 a coin as 10,000 a coin. And at 1 million a coin, it's just as effective. And at 10 million a coin, it's probably more compelling at 10 million a coin than 1 million or 100,000 a coin. It's kind of a universally scalable asset that gets less risky. Bitcoin will continue to appreciate due to adoption, technical utility, productivity of the people that use it, and then the fiat currency inflation rate in the frame of reference, whatever that is. The truth of the matter is there's always going to be chaos in the physical world. There's always going to be chaos in the political world. And that chaos it devalues currency, it devalues physical property, and it devalues companies because it's happening in the physical world, like that tidal wave. But that chaos is going to increase the value of Bitcoin for two reasons. There's a big idea. The first reason is, as people lose confidence in the countries and the companies and the currencies, and their other assets, they'll run to Bitcoin. That's one reason chaos is an engine for Bitcoin. But the second reason is, if you got drunk and you burned down your building, you would destroy capital. If you got angry and you destroyed your company, or you did a stupid thing, like maybe you produced the wrong product and nobody wanted to buy it and you bankrupted your company, you've destroyed capital. If you start a war and you bomb another country and you wipe out the entire city and all their factories, you've destroyed capital. So chaos in the real world destroys capital. But if you get drunk on a Saturday night and then you go swimming and you lose all your Bitcoin because you drop your hardware wallet in the ocean, or if you forget your seed phrase, or if you have it in your head and someone shoots you and it's gone forever, you've actually not destroyed the value. You've actually accreted the value of everybody else's Bitcoin, right? So chaos that destroys your keys and the Bitcoin that's lost is actually not lost. If I burn down half the buildings in the world, you've destroyed half of the real estate capital in the world. But if I lose half of the Bitcoin stored in hardware wallets or in your keys, I haven't lost anything. I've just doubled the value of everybody else's Bitcoin. As other people learn this, if they figure it out, as the education spreads, then you're owning a bunch of capital and you realize, oh my, I'm exposed to chaos on this side of my portfolio and I benefit from chaos on this side of my portfolio. There's a famous book called Antifragile, and the whole theory of antifragile is things that get stronger under disorder, right? Things that get better under chaos, right? So Bitcoin is that thing getting better under disorder, not getting weaker. And most everything else, every other idea is probably getting weaker under disorder. Long-term, the money supply will expand at 7%. The stock market, a portfolio of scarce desirable stocks like the SP index will probably track the money supply. Long term, over 100 years, Bitcoin should be plus 7% more because you get rid of the risk premium, the risk and the liabilities of the companies. But in the near term, we're in high growth Bitcoin right now, and we're growing, 20 to 40% with volatility on an annualized basis until we move from high growth state to more mature, virtuous state. And then you got to just look at the total world wealth. And if the total world's wealth is 900 trillion, $1,000 trillion, then there's just no reason why Bitcoin should become 10 to 20% of that. And that gets you to a number, $10 million of Bitcoin when we're 20% of the world's wealth in today's dollars.
By now, it's undeniable that Michael Saylor is incredibly bullish on the future of BTC, even believing it could reach prices in the multi-million-dollar range in the coming years. Now the question is, what's your take? What are your price predictions for Bitcoin in the next few years? Do you think BTC could surpass the $1 million mark in the next 5-6 years? Please let me know in the comment box. Thanks to everyone for sticking around until the end. If you enjoyed this video, don't forget to drop a like and subscribe for more similar content. Hope to see you again soon. This is Wealth Wizards wishing you an excellent day. Goodbye.